Friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more very bad, I would say extremely bad week, and I have been saying this for the last 2 weeks in my previous sessions for USA weekly market report. And right now we will prepare ourselves for the upcoming week and we will see what are the things that are important for the market and for us to understand what we should do as far as the overall market and the trend is concerned. So let us first go through some of the important headlines that we must know and have a sense of before thinking about anything else. So let's start analyzing the trend, but before that, if you haven't yet subscribed my channel, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now, what's the primary deal? Okay, first of all, you can see there are regular headlines about European stocks and surging inflation and interest rate hikes. Now, the problem is very simple. Okay, the problem is extremely simple, and whether they want to solve it or not, that's up to them. They are the largest importer of wheat, natural gas, other energy products from the two conflicted nations right now, and you are putting sanctions on them. Now, how you are going to meet your demands if you sanction your exporters, right? So that's the simple thing, that's the simple question, and until and unless it gets solved, you will see these kind of moves. You will definitely see these kind of moves, and European indices are going to make some very deep dive moves going forward. Okay, we will try to cover FTSE or DAX in this analysis. Generally, I keep myself restricted to US or Wall Street indices or stocks, but I'll try to do that in this session. Next, very important headline we have here is this one. Biden announces new military aid package for Ukraine, and if you are looking at the date, so this is 6th of May. It means what it simply means. If you are continuously giving them the aid, it does not mean, it never means that there is somebody who is thinking to stop this. Okay, if you want, you can buy defense stocks, okay, across the globe. They are the one who will get benefited out of it because they get the orders, or eventually they will get the orders because now a lot of countries are thinking about their defense budget, and they are increasing their budgets. That's the thing. Yes, so neither the inflation nor this conflict is going to end very soon, because here is no indication that leaders want to end it. That's for sure. The third one is this one. Okay, let me show it to you. I have read somewhere. Let me show it to you. So I think I'm unable to find that. Anyways, it was related to the current lockdowns in China, and it is spreading not only in their capital city, but it is spreading in China. Now, the good thing out of it is Google is raising their pay, revamping employee reviews and documents shows. It means when everything or when something big, and you can call it as an inverted commas, big negative developments which are happening, tech companies, or Google is undoubtedly the biggest tech company in the globe, and they have the access, or they are generating the access for everybody. Yeah, so they are increasing, so they are one of the ultimate beneficiaries, as we can see. So you can find these kind of stocks. Okay, it doesn't matter whether it is sunny or whether it is a winter season or whether it is a rainy season. This is every season stock, right? Now forget about all these things. Let's come back to the market because we need to understand how things are moving right now. Now the most important thing you need to, yeah, I was talking about this one. It's are hitting more than just Shanghai and Beijing. So you can probably go through this. I'm not going to read all these cities. So the thing is, you have all this news and we are nowhere near the bottom, top economist says as global markets trader. Obviously, there are some reasons for that, and that's why they are saying. And if you are looking at the market and how they have moved, okay, if you're looking at the market and how they have moved and closed as far as Friday is concerned, so Nasdaq 1.4%, Dow Jones 0.3%, overall impact on S&P 500 0.5%, gold settled at 1882, oil at 110, so it has started rising again. The main or the very important thing to take a notice of is US 10-year bond yield. 3% has already crossed. I have said this 2.5 months back, and now it is officially done. Then the VIX is now trading at 30. Okay, finally VIX or in the volatility index has surged quite substantially in the last 1 week. And let's look at some of the other things. So bonds across the period are rising higher, and US dollar index, the kind of strength it is showing is phenomenal, 103.66. So it is very near to 104, and it's been consolidating for the last 2.5 weeks. I mean, this is phenomenal, and it is very near to break out. Once 104 has been taken out, it's not about global economies will definitely going to suffer if dollar index moves beyond 104. But the problem is US with this kind of Wall Street with this kind of balance sheet, they cannot handle they cannot take this pressure as their currency started moving higher, or the dollar index started moving higher or showing immense strength, because their economy will ultimately suffer because of a strong currency, right? So it's going to create a domino impact. So it's very important right now. The first priority must be to settle this geopolitical score and let's find peace somewhere, because if that happens, inflation overall will calm down. Okay, so that's the most important thing, that's the need of the hour, and we must not pray for any more casualties going forward. So that's what I can say right now. Now let's start analyzing this chart. Okay, the first of all I want to look here is the US 10-year bond yield. I've been talking about it, and as we can see, 3% has already been taken, and the next resistance we have here is 3.31. Once 3.31 has been taken, or once the yield moves beyond 3.31, the next two targets will be 4, and it may move up to 5% as well. So things are looking quite scary right now, because from the lows of 0.32 to the current price, and if it moves to 4 or 5%, it will be a 1415% worth of rise. For the sake of understanding, we do not calculate percentage of percentage, but the thing is, I'm just considering this as a number and try to calculate the move. So I mean, this is going to be quite a move on the upside if it moves above 3.31 and probably towards 4 and 5%. So be very, very cautious about what's going to happen on the bond market. Let me tell you, bond market is way, way bigger than the equity market, and once bond market is in pressure, you will see big moves. You will see very big moves, and uh, I am very scared to say very scary moves as well. If you are looking at Nasdaq is moving like anything. Nasdaq is really showing some very bad trends. I have been saying this, all these things about Nasdaq, about because my base case for Nasdaq is in between 9,000 and 10,000, and the way Nasdaq is moving is like there is no tomorrow. Although it's a very high beta index, but the kind of move it is showing is really very, very surprising, because 5% index move, this is a very big index, no doubt about it, but 5% move, 4% move on the downside is really going to scare anybody, because stocks are falling like anything. And it's not about the stocks which are very risky, it's all about uh, the mainstream stocks which are falling right now. So when the mainstream stocks started falling, you need to be very much alert, awake, and aware about the trend. Anyways, if you are looking at the weekly chart of Nasdaq, you can see something like this. Okay, so this is the trend we have here, and hopefully this will respect some of the most important levels. And as far as the levels are concerned, okay, as far as the big support levels are concerned, we have something like this. So this is what we have here as far as the trend is concerned. So we have our next support at 10,443, and then we have 9,329. So these are going to be our next two important support as far as the levels are concerned. Okay, so be very much aware about this move. So we are still currently the close is 12,144, so we are still 2,500 points away from the support. Now, as far as Dow Jones is actually showing some resilience, I would say, but sooner or later it will also start moving on the downside, and which it has already done. So if you are looking at the trend, I have already done that. So let me readjust this a bit. So if you are looking at the trend, you will find out something like this. Okay, so this is what you are going to find out as far as the trend is concerned. And let us see where it is going to hold, whether it is going to hold at or above the moving averages. If not, then we have two big support, and they are 28,553 and 27,484. So in this case, we are nearly 4,000 points away from the support level. So things are looking quite bad. Things are really looking quite bad as far as the trend is concerned. Now, dollar index, I have said this thing, show it to you again. So if you are looking at the last 6 years, so it's been moving, and we have never seen moves like this where the range is formed, but in every 1.5 or 2 years you will see pressure points get created, and right now it is trading very much near to its big resistance level, which is, so as you can see, 104 that we have been waiting for. And once it moves beyond 104, it will be a 6-year breakout in dollar index. That is not good, not only for the global market but mainly for the US market, because the balance sheet they have is so stretched that they can't go beyond a certain level. That's for sure. They definitely can't go beyond a certain level, and if they do, they have it has repercussions on the global stock market. So it's in the benefit or mutual benefit that this will stop here, or the dollar index will stop here, and this should be in the range. If it is in the range and it will move back to towards 88, 89, that would be an ideal scenario. But if it moves beyond 104, and which is the case right now, things are looking very, very, I would say, uncertain on the upside. Now, as I told you, let us analyze some of the US index. Generally, I don't do, but for the sake of understanding, and they are really, pushing themselves, or they are really trying to kick up the can beyond a certain level. If you try to do that, you have to face lots of things, and Europe can't do that right now. What they are trying to do is causing a lot of problem for them. So let us see what's going to happen. That we are not the one who will decide. That's the country thing, but we understand stock market and its move, and that's where we are going to look at. So right now, the way the trend has shaped up, at least, okay, so this is the trend for DAX. We are looking at DAX. So it is showing its next big support at 9,931. Let's see whether it will hold in between 12 and 13,000. If it does, then fine. Otherwise, 9931 is going to be your support. Now about CAC 40, the French index. So it's always been a range. In the last high that the index has made was in the year 2000, and then it's been a big resistance for CAC 40 for the last 20 and 22 years, and if it is continue to do so, then we are waiting for this index to move below 6100. If it sustains above 6171, that's fine. If it moves below 6100, it would be a problem. It would be a very big problem, and in which case we are moving towards the lower end of the range. And the lower end of the range we are talking about right now in the current scenario is in between 3,900 and 4,200. Now, what's the important thing to understand here is, couple of months back, before this conflict started in the month of February 2022, the geopolitical conflict, we are actually very positive, and we were thinking that at that time I would have thought that the breakout will eventually happen after 7,000, and it does happen, and then we will go for the big trend, not only in US index but also in European, in global index, in all the major global stock markets. We are thinking that there will be a strong recovery, but this conflict and the actions that has been taken till now is actually not only increased the risk, but the inflation, the uncertainty, and everything is now moving higher. Obviously, it has to happen. The truth is it has to happen, but this geopolitical conflict, what it does is it accelerated the move. What will about to happen in, let's say, next 5 or 7 years is happening in the next or is happening right now, and it has accelerated like it will happen in the next 6 months or 1 year. Okay, so that's what this conflict has done. And now entire global market will factor in all the uncertainties right now, and that's what we can see in every global index. It's not only about US, Europe, Australia, New Zealand, India. It's all about the global market. So right now, yes, it is right that we are nowhere near the bottom. The bottom is yet to be seen, but let's hope and pray for two most important things. Number one, bond yield, and number two, the dollar index. Let's hope and pray that something at the end of the day will go right and the dollar index will fall below 100 and eventually come towards 89 or 88. If it does not, then be prepared for huge volatility in the days to come. So this is the end of the video. Thanks for watching.